Alright, hi everyone. Welcome to today's pre-market live analysis brought to you by IC Markets. Right, trust all of you have had a great weekend. Yep, spending some quality time with your family, friends. Right, as we approach the final 2 weeks of 2024. Right. Okay, just want to make sure everything's up and running. You guys can hear me well. Right, hi Nick, great to see you once again. Right, sure. Yep, definitely we can cover. We'll be starting off with the dollar index, looking at gold. We can cover Bitcoin as well, and of course we'll look at the other major currency pairs as well as the indices. Alright, okay, before we start today's session, right, please take note of the disclaimer. This is marketing communication and does not contain and should not be construed as containing investment advice or investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital and should only trade with money you can afford to lose. My name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020 and 2021. Right, before we dive into the charts and trading view, let's see what's up on the economic calendar for this week. Right, of course, with Christmas landing on Wednesday, 25th of December, it's going to be a pretty thin week as markets will be closed on Tuesday as well, right? Most financial markets will be closed early on Tuesday, and of course, Wednesday, all markets will be closed for Christmas. And the next day, 26th of December, which is Boxing Day, a few markets will be closed as well, particularly in Europe and the UK. Right, but despite the shorter trading hours this week, right, we still have Canada GDP data out on Monday, 23rd of December, alongside the Consumer Confidence Index released by the Conference Board. We also have a speech by BOJ Governor, Bank of Japan Governor Kazuo Ueda on Wednesday, 25th of December, and we have unemployment claims out in the US on Thursday. Right. You can see here Monday at 1:30 p.m. GMT time, Canadian GDP data will be released, where we expected to see a monthly growth rate of 0.2% for November. In the meantime, after that, at 3 p.m. GMT time, the Conference Board will release its Consumer Confidence Survey for the month of December, where we're expected to see US or American optimism, right? American consumer optimism continue to rise once again. Right, this would mark the third consecutive month of higher optimism. On Tuesday at 12:30 a.m. GMT, we also have the release of the monetary policy meetings by the RBA. We've got durable goods orders out at 1:30 p.m. GMT time, and at 3 p.m. GMT time, we have new home sales as well. As I mentioned earlier, Bank of Japan Governor Kazuo Ueda will be speaking as well, right, delivering his speech on Wednesday, 25th of December. However, there's no specified time yet. As of now, it's a tentative event. And then finally on Thursday, right, we have unemployment claims out at 1:30 p.m. GMT time. Claims have trended lower over the last couple of weeks, which is a sign of resilience in the US labor market. And we will also have crude oil inventories, right? The EIA will release its crude oil inventories, as well as the Tokyo Core CPI data out on Thursday. And it's Friday is going to be a completely empty day on the calendar. Alright, hey, hi Nick. Yep, I did see your message here. Yeah, but yeah, I think we're just still going to progress, right? Go through to it today's webinar as well, right? Although it's a shorter trading week as well, right? But because there may be still some traders who would wish to continue, who would wish to have the analysis for this week, and of course, with crypto markets being open as well, despite the holidays, right? I'm sure there'll be folks interested in Bitcoin and Ethereum as well. Alright, okay, so with that, let's dive into the charts and trading view. Right, so of course we'll be starting the analysis on or with the dollar index, right? So we can see here, uh, since the beginning of December as well, dollar index, after falling down as low as about 105.70, it stabilized around this level here at the beginning of December, and it staged a very strong rebound as well. So if you look at it on a weekly time frame, right, it's actually rallied for 3 consecutive weeks since the first week of December, right, after stabilizing at around 105.70 at the end of November, early December, right, and after that it staged a very strong rebound, and we can see demand for the dollar has picked up quite significantly, with the dollar index, right, rising as high or as much as 2.7% or 286 pips, right, before finally closing last Friday at around 107.49, 107 point, oh sorry, closing around 107.80. Right, hi everyone. Right, apologies. I think there was a little bit of a technical issue. Right, okay, we're back online. Right, okay, right, sorry. Right, okay, we had just covered, of course, the dollar index, the euro, dollar yen, and we were covering spot gold prices. Of course, if there's anything that you would like me to go through again, please do let me know. Right, once again, apologies for the technical issues. I think we're back live again. All right, okay, so once again, right, we've covered dollar index, the euro, dollar yen, and we were touching on gold as well. And of course, if there's anything else that you would like me to cover, please do drop your request in the chat box. I'll be more than happy to go through the analysis with you. Right, so take note, these are the key levels for spot gold prices, right, after making this intraday all-time high on Thursday, 31st of October, hitting a high of $2,790.10 per ounce. We saw gold prices pull back quite strongly, pulling back almost 9%. And then we saw it sort of like trading within this box here. So you can see here, gold prices were falling in the second week of December as well, stabilizing around $2,585 per ounce, and looks to be staging a pretty nice rebound here on last Thursday and Friday. However, any retracement to the upside could be capped at this overlap resistance at $2,650, which has been identified as the pivot, and is also accompanied by a Fibonacci retracement at 50%. Right, hi Watson. Yeah, we can definitely cover Euro CAD, US 30 and US 100 as well. Right, let's cover crude oil. Right, we'll wrap up the commodities, and then we'll head on over to the indices, and then we'll cover Euro CAD as well. All right, great to see the requests coming in as well. Right, so looking at crude oil first, right, XTI USD is the instrument that tracks crude oil prices, and when we look at it here, we can see crude prices have been ranging, right, approximately have been trading sideways since 23rd of October, right, with prices restricted to the upside at around $72.50 per barrel, and being supported at the lower end at around $67 per barrel here. So you can see it's been going through sideways trading since 22nd of October. But that said, we have seen pretty large fluctuations as well to either side, right? This rebound here that occurred at the end of October, early November, was as high as 8.9%, and after that prices reversed sharply, giving up all the gains, right, dropping 8.7% once more. And we can see that although it's trading within this sideways channel, the swings to the upside and downside have been relatively large, as much as 7% and above, right, at least 6% moves or higher, right, along the way, right. So despite trading within this sideways channel, bounded by $67 on the lower end and bounded to the upside at $72.50, right, we can see the fluctuations have been pretty large as well, ranging from as low as 6.3% to as high as about 8.9%. So crude prices managed to stabilize last Friday at around $69 per barrel. If you look at this here, this level is now functioning as a nice overlap support, right? Which is also accompanied by Fibonacci retracement at 50%. So we found this retracement level from this swing low at 6th of December. Going up to the high of 13th of December, we can see the 50% retracement aligns very well with the overlap support, which is the pivot. Resistance is at $71.50, right? This is a multi-swing high resistance. We can see crude oil making the first swing high here on 22nd of November and the second swing high here on the 13th of December. So this creates a very nice multi-swing high resistance. And of course, the support at $66 or $67 basically is a multi-swing low support, with the first taking place here on first swing low taking place in the beginning of October, the second here on 22nd of October, the third here on the 29th, the fourth here on 15th of November, and the most recent one taking place on 9th of December. So you can see very clearly this is a significant multi-swing low support at $67, which we have identified as the first support, and the multi-swing high resistance at $71.50 has been identified as the first resistance. So with crude prices stabilizing last Friday, we're looking for a potential mini rebound here, minor rebound, and we could, if this minor rebound materializes, we can probably expect crude prices to stall at around the first resistance, which is $71.50. Alright, okay, with that, let's move on over to US 30 and US 100. Right, Dow Jones as well. US 30 is the instrument that tracks the Dow Jones futures, and we can see up till Thursday, 19th of December, this index has been in the free fall, right? It had dropped for how many consecutive days? 2, 4, 6, 8, 10, 11 consecutive days. I think this is one of the longest losing streaks for Dow Jones, right? I can't remember when was the last time this had happened. I think this was like some multi-decade loss here, right? So this last happened like a few decades ago. So this 11-day consecutive downward fall for the Dow Jones has seen this index lose from peak to trough as much as 6.9%, right? 6.9% over two trading weeks or so, before finally stabilizing last Thursday and Friday at around 42,325 and staging a very nice rebound on Friday itself. Right, this rebound on Friday from trough to peak was as much as 2.78%, and on that day it managed to close for about 1%. So pretty strong rebound here. So however, I think as we approach the last couple of weeks of the final trading weeks of 2024, right, I think this retracement to the upside for Dow Jones could be restricted at around the pivot level, which is 43,330. This pivot level is a nice overlap. It previously functioned as a nice swing high resistance here on 21st of October, and then after the bullish breakout took place on 6th of November, it proceeded to function as a nice support here. We can see Dow Jones make a nice V-shaped recovery. This time creates a nice overlap level, right, which didn't function as a support, right? We can see the bearish breakout take place. However, this overlap level could now proceed to function as a pretty decent resistance level, right, which has been identified as the pivot, and this pivot is also accompanied by Fibonacci retracement at 38.2%. So the 38.2% Fibonacci retracement was found starting from this. Starting from this swing high. This is the intraday all-time high for Dow Jones that was formed on 4th of December. From this swing high down to last Friday's swing low, we can see the 38.2% retracement aligned quite close to the overlap resistance, which is the pivot at 43,330. Higher up, there's another overlap or pullback resistance, right, at 44,327. We can see a nice swing high taking place here on 11th of November, right? Then we see this big gap up take place. So it's a pretty decent pullback resistance level that's accompanied by not one but two Fibonacci retracements. We have a 78.6% Fibonacci retracement and we have a 100% Fibonacci projection. So how did we find these levels? For the for the retracement, it's pretty clear, right? It is the one where we found a 38.2% retracement from the swing high, intraday all-time high on 4th of December, down to the low on 20th of December. We can see the 78.6% retracement sit slightly above the first resistance, and we also have the 100% projection. This projection was found by running 3 points. First point starting from here, 19th of November, second point going up to the intraday all-time high on 4th of December, and the third point ending at last Friday's low, which was on the 20th of December here. So you can see the 100% projection also sitting pretty close to this resistance barrier here. Right now, of course, first support is this swing low that has been formed last Thursday and Friday. Right, looks to be a nice formation of a swing low support level, and that's at 42,323. Right, so Dow Jones, remember, after falling, or US 30 after falling for 11 consecutive trading days, finally managed to stabilize last Friday and stage a pretty decent rebound. However, I think any retracement to the upside is likely to be limited as well. Oh, not only that, the pivot is not only accompanied by Fibonacci retracement at 38.2%, it's also accompanied by Fibonacci projection at 61.8%. It's the same projection that was used in the identification of the 100% projection, right, which is close to the first resistance. So these are the key levels here for US 30, right? So any retracement to the upside could stall around the pivot level here, and we could potentially see this index reverse and slide lower once more. Right now, let's take a look at the 40 first, right? This is the instrument that tracks the DAX futures, and then we'll cover US 100. Or we'll cover US 500, and then we'll cover US 100 as well. Right, so looking at the DAX, right, the DAX also has seen 1, 2, 4, 6, 7 consecutive trading down days, right? So it's made a nice swing high resistance on Friday, 13th of December, and over this period, right, from this is also the intraday all-time high for DAX in 13th of December. So from peak to trough, this index has also shed more than 4.3%, right? Quite a big drop here, pullback here. However, we saw a nice bounce of 19,664 last Friday, right? This level here is actually a nice pullback support level, right? We can see a nice swing high resistance being formed on 18th of October, and then the second one as well, and this is on the 30th. So this is like a nice multi-swing high resistance. And then once the bullish breakout took place on Monday, 2nd of December, this level can now potentially function as a pullback support, which is what seems to have happened on Friday, 20th of December. However, there's still this index still looks pretty weak, so I think the 40, right, this instrument tracks the DAX futures, could likely to slide lower again towards the pivot once more before maybe stabilizing around this level and staging a minor rebound. So this pullback support level is also accompanied by Fibonacci retracement at 50%, right? This starts from this swing low on 19th of November, going up to this swing high on the 13th of December. We can see the 50% retracement aligned with the pullback support very nicely. Looking a little bit below, there's a nice overlap level at 19,230. This level previously functioned as a small resistance here on 18th of November, after which it proceeded to function as nice support on the 28th. Right, so this creates a very nice overlap level, which we can use in the identification of the first support. Right, okay, so let's cover US 500, and then we'll look at US 100, and we'll cover, of course, we'll cover Bitcoin as well. Right, similarly for US 500, it has managed to stabilize at around 5,850 last Thursday and Friday. Right, you can see Wednesday, 18th of December was also FOMC day. This was a huge move for equity markets, right, as the Fed moved ahead with a hawkish cut. So if you look at it from peak to trough, S&P 500 dropped as high as 4%, and then from open to close was about a 3% down day as well for this index. So you can see a huge move, probably the largest move down day since perhaps August 2024, right? Probably over that period here. But we see US 500 stabilizing at around the first support at 5,851, and it's attempting to rise up towards the pivot. The pivot is an overlap resistance. We can see a nice swing high being formed here on 8th of November. We see resistance once more on 27th of November, and then we see support in mid-December. So this creates a pretty decent overlap level, which we have identified as the pivot. So we could see US 500 rise up towards this level and stall once more before sliding lower. First resistance is at 6,094. This is where the intraday all-time high was formed. Intraday all-time high for US 500 was formed on 6th of December, hitting as high as 6,999.90. Right, so once again, similar, I guess, to US 30 and the 40, right? They've all equity markets have taken quite a strong hit since Wednesday, 18th of December, which was when the FOMC meeting took place, where the Fed conveyed a very hawkish rate cut and hawkish outlook as well for 2025. All right, now let's move on over to US 100, right? US 100, so wait, hang on. Right, so US Tech 100, right, is the instrument that tracks the Nasdaq futures, right? Nasdaq 100 futures, and we can see this index as well falling sharply on Wednesday, 18th of December, and from peak to trough, right? Remember, this is the intraday all-time high for US 100 that was formed on Monday, 16th of December, and since this peak, right, looking this peak to trough move is a drop more than 6.5%. However, right, as markets stabilize on Friday, this has now recovered, right, dropping only 4%. Right, okay, so very clearly, the first resistance is at around where the intraday all-time high was formed. That's at 22,101, right? And we can see US 100 stage or stabilize last Thursday and Friday at around 20. All right, hi everyone. All right, okay, sorry. Let's continue with US 100, right? The US Tech is the instrument that tracks the US 100 futures or the Nasdaq 100 futures. Right, so we can see here, right, we also have the 38.2% Fibonacci retracement aligned just underneath the first support. We can also run another Fibonacci retracement from this swing low on 6th of September, going up to the intraday all-time high on the 16th of December. Is there any other retracements that we can use? Oops, hang on. Right, we can also see another 38.2% retracement over here at 20,673. Right, perhaps looking at this level here, I see a nice overlap. Right, actually there's a nice overlap that stretches all the way to this swing high here on 10th of July. This looks to be like a pretty strong overlap level, right? We can see resistance here. Right, we can see a swing high resistance taking place here on 11th of July. Resistance once more on 30th of October. Then we see nice support here on 27th November, and of course this bounce here as well on 20th of December. This creates a pretty decent overlap support, which is accompanied by Fibonacci retracement at 38.2%. You can also probably run another Fibonacci retracement from this low, swing low on 31st of October, going up to the intraday all-time high on Monday, 16th of December. Looking at all the fibs, we can see that the 61.8% retracement sits pretty well with the first support, as well as aligning well with the 38.2%. So let's just keep 61.8%. Right, and what we have here is a Fibonacci confluence. Fibonacci confluence simply means you have more than one Fibonacci level at a particular price zone. So in this case, for the first support, at 20,680. This is a nice overlap support that's accompanied by not one but two Fibonacci retracements at 38.2% and 61.8%. Pivot level is a nice overlap resistance at 21,600, which is also accompanied by a Fibonacci retracement at 61.8%. And we can see a nice swing high resistance being formed here, close to the intraday all-time high on Monday, 16th of December, and that's where the first resistance has been identified at 22,101. Alright, okay, so these are the key levels here for US 100. Right, there was a request for Euro CAD as well, and then we'll wrap things up with Bitcoin. So looking at Euro CAD, we can see the Canadian dollar or the loonie has depreciated significantly since Friday, 22nd of November, right? With this currency pair going from trough to peak, rallying as high as 4%, right? Gaining about almost 575 pips over the process here. Now I also see a very nice downward move, and that began on 1st of November. We can also run a Fibonacci retracement from this swing high on 4th of November going down to this swing low on the 22nd. When we look at all the fibs, we can see that Euro CAD has stalled at around the 78.6% retracement level, right? This is close to what I see is another this was a nice swing high resistance that had taken place on Monday, 14th of October, and it's where exactly the Euro CAD stalled last week as well, right? This is the pivot level that we're going to identify. This is a multi-swing high resistance that's accompanied by a Fibonacci retracement at 78.6%. And with if we do see Euro CAD rise up strongly once more, this is probably where it could stall once again. And higher up, of course, I see a very nice multi-swing high resistance that's been in place since 5th of August, and that's at 1.5165. And in terms of support, right, there's a nice overlap level that I see here, right? If I stretch it all the way across here, right? Okay, maybe this level is not so clean, but generally, if I look at it here, this is a very nice overlap level as well, right, at 1.4852, which we can identify as the first support. Right, we can see a nice retracement here, or resistance here on Monday, 18th of December, resistance once more on 27th of November, resistance again on the 5th of December before finally making a bullish breakout. After that, we see this level proceeding to function as nice support as this swing low takes place, or this swing low is being formed on Wednesday and Thursday, 11th and 12th of December. Now on this uptrend here, we can also run a Fibonacci retracement starting from this swing low on 22nd of December going up to the high here. Looking at all the fibs, we can see that the 38.2% retracement aligns very well with the overlap support, which is at 1.4852. As a take note, these are the key levels here for the Euro CAD, right? It's approaching a multi-swing high resistance once more. This multi-swing high resistance level has been identified as the pivot, which is accompanied by Fibonacci retracement at 78.6%. We could potentially see this currency pair stall around this zone once again. Right, then let's wrap things up with Bitcoin, right? There's Nick as well as Abdi Rahman had a request for Bitcoin as well. So let's take a look at this cryptocurrency, and we can see here, right, over the weekend, right, Friday, Saturday, we actually saw Bitcoin try to retrace up towards this pivot level at 99,581, but actually today, right, Sunday, we can see it's pulling back. So actually I'm going to just slightly tweak the analysis, right? So we're looking for potential bullish bounce now of the first support. First support is going to be our pivot. This is a nice overlap level. Pivot is going to be switched into the first resistance, and we're going to be identifying a new first support. But before that, let's just identify the pivot and resistance first, right? So you can see here, looking across this level at 92,791, right, we can see a nice overlap level with Bitcoin running into resistance here in 18th, 19th of November, after which it proceeded to function as nice support on the 27th of November, support once more on 6th of December, and as recently as last Friday as well. So this creates a very nice overlap level, right? It's an overlap support level which we have identified as the pivot, and is also accompanied by Fibonacci retracement at 38.2%. This retracement level was found starting from this swing low on 4th of November, going up to the intraday all-time high on 17th of December. We can see the 38.2 retracement aligned very well with the overlap support, which is the pivot. Resistance is another overlap. First resistance at 99,518 is another overlap level, right? We see resistance here on 22nd of November, resistance here on 7th of December, then we see support on 13th of December, and then resistance once more on the 21st of December, which was yesterday, Saturday, right? So this is another nice overlap level, which is also accompanied by 50% Fibonacci retracement. So this retracement level, right, was found starting from this swing high, right, the intraday all-time high that was formed on 17th of December, down to the low of last Friday, and we can see the 50% retracement aligned pretty well with the first resistance here. Right, so once again, Bitcoin has, after making this intraday all-time high, Bitcoin has now fallen for 5 consecutive trading days, and it could potentially find support at this overlap level, which is the pivot. It's accompanied by the 38.2% Fibonacci retracement, and at the same time, it is also slightly above where the green Ichimoku cloud sits as well. Remember, the green Ichimoku cloud can sometimes function as an area of support. So we have 3 factors that are identifying a potential support zone. We have the overlap support, which is the pivot. We have the 38.2% Fibonacci retracement, and we have the green Ichimoku cloud itself. Now, what about the first support, right, beyond the pivot? Right, in this case here, let's see another pretty decent overlap level at 87,933. And you can see some consolidation around this level here from 11th of November till the 18th of November, and there might be a 50% retracement sitting quite close to this level here. Just let me check. Yep, there is a 50% retracement that we can use. Right, there we go. Right, so these are the key levels for Bitcoin. So take note, this crypto has been falling for 5 consecutive trading days. However, I think it could stabilize at around the pivot. Right, the pivot is an overlap support that's accompanied by a 38.2% Fibonacci retracement, and it's also sitting above, just above where the bullish Ichimoku cloud sits as well. Right, so we have 3 factors contributing to a potential identification of a strong support zone. We have the overlap support at 92,790. We have the 38.2% Fibonacci retracement, and of course we have the green Ichimoku cloud as well. Alright, this is what I've got for today. Right, I'm just going to, before we wrap up today's session, I'm just going to launch a poll as well. It's really appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll just do a quick summary before wrapping things up. Alright, really appreciate it if you guys can give your feedback with regards to today's webinar, and just take note, right, because this, as we enter the final two trading weeks of this year, right, we have Christmas on Wednesday, right, 25th of December. Most financial markets will be closed. We'll have an early close on Tuesday, which is the 24th of December. All markets will be closed on Wednesday the 25th, and Thursday 26th is Boxing Day as well. So most European markets will be closed, including the EU, and then markets should resume on Friday the 27th. So take note, it's going to be relatively shorter trading hours here, and market liquidity could be thin as well, so do watch out for that. And these are the key macroeconomic releases for this week. We have Canadian GDP data and US consumer confidence out on Monday, 23rd of December. We also have the monetary policy meetings from the RBA's latest policy decision that's out on Tuesday, 24th of December, alongside durable goods and new home sales from the US. We also have Bank of Japan Governor Kazuo Ueda speaking on Christmas Day as well, right? But that could impact markets on Thursday, or which markets that those markets that will be open on Thursday. And finally, we have unemployment claims out of the US, EIA crude oil inventories, and Tokyo core CPI all out on Thursday, the 26th of December. Right, so that's all I got for you guys for today, right? And just take note once again for the dollar index. Right, these are the key levels here for the dollar index. After hitting a high of 108.54 last Friday, dollar index has been pulling back quite sharply. It looks to be approaching a pullback support level, which has been identified as the pivot. This pivot is also accompanied by 38.2% Fibonacci retracement. So we're looking for potential stabilization for the dollar index around the support zone, and to look for potential resumption of the uptrend. So we're looking for a potential bullish bounce for the dollar index of the pivot level. That's accompanied by Fibonacci retracement at 38.2%. All right, and once again, thanks everyone for those of you who have voted in the poll as well. Truly appreciate it. And wish you all the best in your trading journey. And of course, for all of you who are celebrating Christmas as well, this is a great time to spend some quality time with your family and friends, of course. Right. Take care. Have a great trading week. Merry Christmas, and I'll catch you all in the next session.